Hi folks, Scott here, and this is the wrap for Friday, November 15th. Well, the trend just won't stop. That's what happens when you have free money. Thank you, governments of the world. But before I cross the line and get political, let's talk about what matters most. How to trade it. That's all that really matters. So today was a really interesting day. Before I get into that, let's talk about what Monday may bring us. We had our third consecutive 200-day high close. I thought that was a worthy pattern to test. And I did. It tested extremely well. I'm not going to show you those numbers for time's sake. Extremely well in both directions. Using an end-of-day stop. Very high gap fill numbers. So basically there's so much momentum at these levels that it's tough for the market to break down. On the same token, it's tough for the market to continue going too far without some profit taking on a gap up. So that's the good news. I think good news. Odds look good for gap fill on Monday, or gap fill in general following this pattern. And I thought I would take it a step further and say, what about on Mondays? And I'll show you those results. And ask yourself, what do you think has happened historically when fading gaps on Mondays after 3 consecutive 200-day high closes? Is it riskier in either direction? Drum roll. Not really. Using an end-of-day stop hasn't really made any money to the long side because the average winner is less than 2 points. Remember, always take these numbers divided by 500 because we have 10 contracts and each point in the ES is $50. So, but it's still 5 of 6 winners to the downside, 7 of 8 when shorting. So pretty similar numbers as to what any day of the week should. So in general, it's not a risky pattern for buying down gaps. I think a lot of people think that. It doesn't mean it'll work on Monday, but there's a lot of momentum. So seems to me it seems to me to be setting up to be a pretty decent trade on Monday. I don't like trading on Mondays, but this could be a decent one. We'll see. All right, going into today, let me show you what the worksheet showed. And if you take the average of all 8 indices, gapping above the highs, which is what most indices did, I think the Qs gapped right at the highs. Strong numbers. They do not get much better than this. 66% win rate, 1.78 profit factor. You know, beyond a shadow of a doubt, I'm trading that gap on any day. It's just that unusual to see such strong numbers. It means the market is set up in a way historically that is proven to kick some butt for fading the gap. Further amplified by the fact that up gaps on OPEX Friday are also extremely good. So I will admit, one of my thoughts that raced through my mind was, is this another one of the scenarios where it is set up so perfectly that it's going to be a crowded trade and may not work as well as one might expect? I promise you I had that thought this morning. I came into the trading room with that attitude. Was very begrudging, not begrudging, actually there was no doubt at all about taking this trade, but I wasn't as amped up as some people were because I got some emails and private messages and I was a little concerned people were too jacked up about how good it looked, but I didn't really show much here that didn't further amplify that. Look at that, up gaps OPEX Friday after closing a 30-day high, really strong numbers, a small sample size. What about OPEX Friday in general? Went above a 200, off the chart good. And I ran an optimization, used a percent of gap size for the target and stop. And it was like 20 different scenarios. And I posted this in the trading room, showed a 75 to 80% win rate with MTG stop parameters, intraday stops, and profit factor of 3, roughly. Targeting 1.5 times the size of the gap. So roughly the extended target today, using a stop 2 to 3 times the size of the gap. Now that would have been fairly sizable. See, the gap was 3 points, I believe, today, 2 or 3 points. So it could have been a big gap. So bottom line, attractive setup all the way around. Key concerns, the Russell's not at all-time highs. There's divergence in that it could add some follow-through bid support, if you will, to the market. That's pretty anecdotal, but a little bit of a stretch and not a typical comment from me. I'm just trying to quell people's excitement. And I said more important, the last 2 days show strong buying pressure on low volume, which implies to me a major short squeeze. Squeeze could continue after the open, especially gaps don't fill the market's test morning highs. So sort of right, sort of wrong. I said I'd fade the open with a 3/4 size position and it stop up to 7 points to try to get placed above R2. We'll hold some position for extended target area. Went short at the open. Actually, just I had an execution. Actually, I'm not even positive the execution area. I've had such an insane day for a lot of stuff I shared in the trading room. my grandmother passed away this weekend or last night, so a lot going through my head, I guess. But I'm not positive I made a mistake. The bottom line is my order. I try to set up time-activated orders. I did enter early in some of my discretion accounts, which is what I normally do when it's a really strong setup like this to give me time to focus on my core account. But I goofed that up. Didn't cost me anything really today. I got filled at 1790 even. But the market did sell off a little bit between the time I posted my comments and by the time I was able to place the order, which is a little disappointing. That's neither here nor there, though. It was a great setup, even was only for a couple points of opportunity. Settlement's the price shown on a daily chart. It's important to pay attention to it on what I call these crowded trades that are really high probability trades. If you look closely, you'll see the close for yesterday was 1787.75. Settlement's the official close on a daily chart or higher, 1787.75. Well, that was just above the blue line here, which was the last trade, which was 1787.50, and the 4 p.m. close was where the ETFs roughly were trading. Closing was 1787.75. So I wanted to trade it aggressively with half the trade position and take the other half and trade it conservatively. So I sort of said that out of order. I targeted 1788, called it, announced it, posted in the trading room from the get-go. That was always my plan. Once I decided to trade it, 1788 was going for 2 points of a 2-point win. I was going to take the other half, and I was targeting 1785.50, the extended target area, using a 7-point stop. Got it up at 1790.25. Price came down and tagged 1788 even. If you look closely there, I was not filled. It bounced around. At that point, I tightened half my stops to 1793. 1793 was one tick above Globex highs. I did get questioned this, like, why in the world would I not use my proximity rule? It traded at my target. Go ahead and tighten my stop to entry or, just above it. And that's almost always what I'll do, except for the very best setups. And I've learned the hard way to leave the best setups alone. So this was sort of a hedge, if you will, between cutting my risk a little bit while giving it room to work. And I thought maybe it was going to work out beautifully because it came up and rolled over. And this happens on OPEX Friday sometimes. Came all the way back down to, you guessed it, 1788 again. And then it came to 1788.25. One of these here. I think it was that one there. Yep, 1788.25. So twice it traded on my target, and one time within a tick over a 4-hour span, and I never got filled on any of it. So by that time, and I was gone most of this time anyhow today, pretty crazy day. And when I came back, I was underwater. It was above the open. At that point, I wasn't going to close it out. I was going to let the market take me out. So I left my stop 1793.25, but I did tighten the other half down to 1793, and tighten the other half to 1794.25 because I had tightened the second half from 7 to 5 to get 2 points above Globex this morning and posted that in the trading room. But this afternoon came back, tightened to 94.25, got stopped out at the end of the day, lost an average of about 3.5 points on a pretty good sized trade. So pretty frustrating for one that went to my stinking target. And I've thought about it a lot, and I'll continue to think about it over the weekend, but I don't know that I would change anything on that. Now, I did have a good tip from one of our longtime members. He's got a rule that if these other markets fill the gaps like the Russell NASDAQ did today, he automatically tightens the stops and or takes profits because your risks are greater if they could reverse and provide bid power the opposite way, and that's what happened today. But again, OPEX Friday, incredibly strong setup. Just a crowded trade. I could tell from price action this morning. I wish I could explain it better to you, but I was extremely down on my trade this morning, and I think it concerned some people, because I normally like to bad talk my trades. It has a weird way of making me feel better, and I'm less disappointed on the ones that don't work. But anyhow, didn't work. Today I got stopped out. I'll be relaxed, and raring to go on Monday morning, though, and if we gap up again, I'll take it in a heartbeat. So those are my thoughts, and that is the wrap for Friday, November 15th. Have a great weekend.